Liberty Gold is focused on the Great Basin in the United States for Carlin-style sediment-hosted oxide gold systems. And we have two core projects, Black Pine, which is gathering all the market attention in Idaho, and Gold Strike in Utah. And if you want more information after this presentation, our website is fully loaded up with Verify models, and people can go play with it and see a lot more information than I'll discuss today. All I really want to get across in this presentation is just recognition of the enormous volume of rock that we're dealing with that is historically and Liberty Gold drilled that contains oxide gold mineralization over a massive area, and leave at the end of this presentation recognizing we've only drilled 5% of this target so far. I will be making forward-looking statements. So the projects we're dealing with is Black Pine for the most part, 100% owned with a 0.5% NSR in this discovery. Gold Strike in Utah, 100% owned and controlled, and a 2.5% NSR on that oxide gold system. At the end of the presentation, I'll just comment on Gold Strike's economics under the current market conditions and show you what the backup asset is for this company. With regards, I will take a second or a minute and talk about the COVID virus. Liberty Gold locked down after the PDAC and adopted a no-fly policy. Our two geologists in Canada stay at home. They work on computer modeling, graphics, drill targeting, and compilation of the metallurgical work, and they are not permitted to cross the border into the United States. But our 5 US-based geologists live within a 3-hour drive from the property. 1 geologist goes per vehicle. There's safety protocol set up, and our contractors all adopt the same safety protocol, so we've got everything covered on a protection basis for our employees within the community. Capital structure, shares outstanding, just over 240 million shares. Market cap is currently, at the current price, is around $250 million Canadian. Working capital, US $15 million, and there's more capital that will be coming into the company with no dilution to the shareholder base in the next slide. There are 5 analysts that cover us, and their names are there, and if they've put out a resource estimate, we cannot send that out to our shareholders because it would be deemed by the BC Securities Commission as being 43-101 compliant, and we have approved it. So if anyone wants that kind of research, you will have to contact those analysts directly. With regards to the ownership structure of the company, 43.6% of this company is now owned by approximately 30 resource funds. Management and insiders have 6.8%, Newmont owns 5.8%, and Tech Corporation owns 1.6%. Next, please. So what we've been doing in the last year is trading projects for projects. So as of March 26, we had $21.5 million Canadian in our treasury. We have a sale process with our next payment due on the Halillah project sale in Turkey of 6 million US or 8.1 million Canadian, due on August the 15th. We're in the process of closing the asset sale of the Kinsley deposit in Nevada to another public company. There'll be news on that soon. I've sold the region NPI to a small royalty company in the United States for $800,000 US, and with that we got 2 million warrants that are in the money by approximately $700,000, which is not in this summary. I've moved the Griffin project to another public company in Vancouver, and I have one more project in Turkey with 6 discoveries on it to sell, and I'm working on that now, and another project in Nevada. With regards to additional capital coming in, our largest institutional shareholders own those warrants, and there's $7.7 million coming in because those warrants are in the money by approximately 100% by the end of January next year, and another $14 million 7 months later. So effectively it adds up to about $80 million, and that's the level of dilution you'll see, and that excludes pending asset sales if I can pull those off. And this is just a photograph, I'm going to get to this in a bit, of Black Pine in Idaho. And I'm going to show you the actual photograph and talk to you about it for a minute or so. We purchased this project in 2016 for a combination of cash, 300,000 shares of Liberty Gold, and granted the vendor a 0.5% NSR. It aggregated approximately $1 million US to purchase this project. It was a historical past producer, produced 435,000 ounces of gold at 0.63 grams gold. And for a run-of-mine oxide heap leach system currently in the United States, they generally run about 0.4 grams to just under 0.5 grams. So this operated 23 years ago before the mine was shut due to the bankruptcy of the operator. After we purchased the project, we found 1,874 historical drill holes. And we compiled that, remapped the projects over 2 years, drilled the first hole last April, and confirmed a high-grade oxide discovery on the first hole. So this is what the image looked from the photograph. So this picture is taken from a distance of 18 kilometers from an interstate highway onto the Black Pine discovery. The dark red area that says A pit and B pit is actually 1 square kilometer. We drilled 105 holes into that last year, and that's what moved the market cap, and drilled 1 hole, which is actually 3.1 kilometers away, to hit the range front, and we hit 55 meters of 0.49 grams of oxide gold that was 93% cyanide soluble, and that added $50 million to the company market cap. So when you look at the image of the photograph, this is taken from the dry part of the Great Salt Lake. There's no streams or salmon streams near this discovery. The property was subject to a forest fire 20 years ago. There are no timber values. We've drilled and hit oxide to a depth of 350 meters, and none of those holes make water, so there's no water where we don't want it, but there's a lot of water in the basin, and the old mine leach well, mine water well, is sitting there right at the mine gate and can only be allocated to mining. So when you look at the schematic cross-section above it, the mineralization came up very simply through the brown rocks, and we've discovered it went horizontally into the blue, purple, and green rocks, and it doesn't exist in the yellow rocks. And you can see the grades of 4 of the historical 5 open pits and where they were when the mine operated 23 years ago. What we're doing this year is we're going to drill test, which we're doing right now randomly, that dashed area around that covers 11.8 square kilometers, because we want to verify by drilling it that our geological interpretation is correct. And once we get that geological data back, we'll redo the schematic fence section, and then we'll target it for feeder fault corridors in the system. Next, please. So this is looking at the same photographic image, but I'm looking at it from right to left. So the area of 1 is where we made the 2 high-grade oxide discoveries last year, and the other 9 targets that we're currently going through right now are in the blue squares, numbered up to 10. The red dashed area is 11.8 square kilometers. The green area is under permit application because we've interpreted, based on the data from targets 6 and 7, that the entire green area contains oxide gold mineralization in the same host rocks in the exact same stratigraphy. For people who don't really understand this technically, every yellow dot is an in situ 0.2 gram cutoff minimum and higher unmined or in situ oxide gold intercept that has not been mined. The purple area is a 50 ppb and greater, effectively mostly undrilled gold and soil anomaly that covers over 7 square kilometers. And the gray areas are the previous 5 open pits, which we've now concluded link into one large oxide gold system. And we exclude in this target the discovery up to the northwest, which extends this system for another 5 or 6 square kilometers. Next, please. So this is what we found when we got into the focus area last year. All we did was drill, and our interpretation was that the previous operators had not drilled deep enough. And these are the best intercepts. So take them for what they are, but these are multiples of what are being mined in the Great Basin, and these are on average at 92 to 97% cyanide solubilities. The yellow holes are Liberties. The white holes were drilled by the previous operator. We took the top 500 holes that were unmined, and when we drilled 105 holes, by drilling deeper, we kicked 111 of the historical holes off of the top 500 chart. But just pay attention to these grades, but recognize there is lower grade oxide material sitting above these that's going to bring down an average grade of a deposit. So as long as it's economic, that's what we're going to focus on, and I'll explain that later on when I get to discovery number 2. So this is what it looks like. It's not pretty to look at. It's a decalcified siltstone, and this intercept is 7 meters of 12.4 grams gold. It's $600 oxide rock. So if we're looking at a 0.4 gram material, it's going to cost you the same $6 or $8 to strip this, put it on a heap leach pad, and treat it. This stuff is highly cyanide soluble. This is the money rock, and this is what drove the market cap up because of the high grades over the standard for what's being mined, or the few mines left in the Great Basin. This is payback of CapEx rock, and this is why the company has got so much ownership by institutions. So this is a bit of a different slide, and this is a 7 kilometer long section on the Black Pine discovery. And what we've done is created that color long section, and we've compressed every unmined oxide gold intercept into one line that's about the width of a pencil lead. So we're projecting drill holes into this section 1.5 kilometers on either side of that line. You can see all the historical dots, and purple's over 1 gram. So we've compressed it, and we've compressed it for one reason, just to show you how big the system is, and that it follows the slope of the mountain, and all of our RC drilling can actually reach the depth of this mineralized system. It follows the slope, and it doesn't dip into a mountainside. When you go look at the map above it in gray that show all the grades and pullouts, the orange rocks, the orange dots, are 5 bulk sample we just took from the pit wall, and you can see grades from 0.3 to 4 grams of what the previous operator left behind when they declared bankruptcy. Those results are pretty much done rinsing right now, and I would expect we'll have a bulk sample results, the metallurgy, out by the end of June. It'll come out earlier than people anticipate, and that's at a 3-inch crust simulating run-of-mine operations. The pullouts in white are our core holes, and that will come 1 quarter later, so there'll be 2 metallurgical releases this year. And as we go, we're going to keep working on trying to make this thing pit constrained. So we think we can make the first square kilometer in red pit constrained. Now we're pushing out into all these other areas where the bulk sample is to add another 1.5 kilometers to the system to see if we can build a much larger pit when we finally do a resource estimate on this. So this is a historical slide. It's a really good history period of what mining was like in the 80s to today. So Noranda sold the upper section, drilling only to approximately 300 feet, to Pegasus for $6.3 million in 1998. Pegasus mined the A pit, which is, you can see in the middle section, after they mined it. They pulled 198,000 ounces of 0.6 grams out of that upper unit. Our interpretation was there was a horizontal control, so we initiated a drill program going underneath at the historical drilling, and you can see all the purple is over 1 gram of gold. That was the high-grade discovery that was found that the previous operators, had they not been under budget control, could not drill below 300 feet. That's what they left behind, and it looks like they left behind a tier 1 discovery once we finish off with this. So this is the same section of where we are. There's the A pit, and this is the numbers we're dealing with. So you can see on the bottom, you can see these big widths with high oxide grades. So the mineralization has come up through these faults that come up through the purple rocks, which are dolomites, and these barren brown sedimentary rocks, and they go laterally into that dark green decalcified siltstone. And that's where the high-grade oxide was sitting. The previous operators were mining below the yellow sandstones and the light green rock, but we don't like the middle green rocks. So in a modeling of this, whenever it would be to be mined, hopefully one day, you'd be taking the light green, the middle green would be waste, and the dark green is the money rock for payback of capital. And this just gives you a general overview of the scale. So this is called Discovery 2, And Discovery 2 is just the high-grade base is 400 meters by 600 meters by 40 meters thick. And that's going to contain a lot of ounces once we do a resource calculation on it. And so what we're doing is trying to find these fault corridors with our regional drilling, and then we're trying to bring it in and figure out this entire system. So this is the plan view. Discovery 1 is 150 meters wide and 1 kilometer long, and Discovery 2 is in yellow going from the northeast-southwest direction. And these are all unmined oxide drill intercepts. So we know the scale of both of these systems. And right now, our drills have moved outside of that core area that we think we can pit constrain. And the drills are moving over towards the E pit, the F anomaly, the Tallman pit, and we've already drilled the J anomaly, trying to get this entire area pit constrained and find out if we can get any more feeder fault corridors. So one drill is currently focusing in this area, and the other drill is focusing on the entire district of 11.8 square kilometers. We have enough money once we figure out where we want to go geologically, and if we link into another one of these feeder fault corridors, we can double shift those drills, and making one drill equivalent to 2 drills and 2 drills equivalent to 4, or even add another drill into the system. So it's all planned out accordingly, but we've got to do it logically and just not go out and drill something in a random fashion without the use of science and to direct us. And this will be the last slide on Black Pine. This just shows you what the system looks like with regards to unmined gold. And this is following, these are 2.5 kilometer long northwest southeast long sections. And we're after the dark green rocks and the blue rocks and the purple rocks if they've been structurally disrupted, and also underneath of the sandstones where you see D and E. So at the end of this year, you're going to get metallurgy twice. You'll hopefully get a resource model. But we've already published that we think this system, 4 million ounces, is conservative. And we're not sure when we're going to get a resource together, because we just don't want to put something together that's not fully pit constrained and mislead our shareholder base. And lastly, I'm just going to talk to 2 slides here, and then I'll pass it back to Joe. This is our second project, the Black Pine project. This is done at $1,300 gold with 1,700 drill holes. It's a 0.48 gram deposit with 78% recovery and after-tax IRR of 29.4%, 95,000 ounces of gold, and over 7.5-year mine life, and that's just in the bright yellow, red, and orange. Anything in purple on that map, we do not have enough drill pierce points in it to pull it into a pit. And I'm just going to move over to one last slide, and I'm just going to show you what the economics look like today at different gold prices. So at $1,500 gold, the after-tax IRR on our second project is 41% with a payback period of 1.8 years and an after-tax NPV of 210 million US. And you can see what happens when it goes up by every $200 increment in gold, and also what it does when you go down by a $200 increment in gold. And just shows there's another significant asset in Liberty on top of the Black Pine. And at the end of the day, we'd like to have this company structured just to have Black Pine and Gold Strike and cash and redeemables to streamline the company. And I think that's a summary. And Joe, thanks so much.